Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And a lot of people ask me this question that Shashank, yes, you have built a good net worth and now it is a very big net worth, and now your job is to just ensure that this net worth keeps growing at a very good pace, right? Not do something funny to lose it. So my job is now capital preservation more than wealth creation. But a few guys asked me recently that Shashank, if you had to start over again in today's market, let's say you only had 5 lakh rupees to invest, not even 10 lakhs, 5 lakh rupees to invest, and you had to start today in 2026, how would you play out your strategy, right? So today I'm going to show you exactly how I would play out if I only had 5 lakhs today to invest, how I would split that 5 lakhs as of today, and this is exactly my step-by-step plan, and I will show you that one by one. Now, first thing is, let's do some assumptions. Assume that I have 5 lakhs already ready with me in lump sum. I've saved it over a period of time. I don't have any other liabilities. This 5 lakhs is something I can fully invest to start growing for my future, right? All my medical, life insurance, medical insurance, all that is sorted. I have this full 5 lakhs to invest right now, and I want to grow this. Second, I need to have realistic expectations. Even when I was not making a lot of money, I had very reasonable expectations. I did not bet for the moon, but I got lucky during the COVID because everyone made money and I was in the right place at the right time with the right bets. Being at the right place, right time is okay. Having the right bets also worked. At that point, I had bought Varun Beverages, Apar Industries, Trent. That gave me 2-3x multi-baggers, right? But that was a different era. Now we're in a different era. So I'll tell you how I would play today, assuming I have 5 lakhs of lump sum investment. Now, first thing is we have 2 types of investments to play with, stocks and mutual funds. I am not putting bonds in this. I'm not putting fixed income in this. I'm not putting gold and commodities in this. I'm just going straight away into growing my capital, okay? And what is my reasonable expectation? My reasonable expectation is not 12% per year. My reasonable expectation is beat the index, or at least be at par with index. Because if you know, the stock market does not go up every year 12%. It is an average of 12%. Average means some years are good, some years are bad. So in some years that are bad, I don't want to lose money. But in some years that are good, I want to make more money than the market. So that is basically the idea. Now coming to stocks and mutual funds, and let's say my corpus is 5 lakh rupees. Very good, very simple. 5 lakh rupees is what I have right now. Okay. The first thing what I would do is, under mutual funds, and why I'll tell you mutual funds also, I would choose any flexi cap fund. I don't want to name any. I think you guys are smart enough. I would just choose any flexi cap fund and I would invest 1 lakh into this flexi cap fund. And how much is 1 lakh of my total 5 lakh corpus? That is literally 20% of my corpus would go straight into a flexi cap fund. Now, why did I do this? If I'm going to invest in stocks and I want to play a game of making money, I should also be very clear that I'm also going to lose money, right? Nobody is a genius. Everyone makes money and loses money. Game is over time, you should make money. So if I'm saying I'm going to play a very risky game, because usually in the stock market, the drawdowns are very high. Drawdown means from the top, the stocks can go down a lot. And if I want to play aggressive, I need to have a backup hedge as well. I'm not an idiot to put 5 lakhs today and lose all my money. So when the market falls, I need to have some kind of balance in my portfolio to not panic and stay put, because only after the fall is when the rally starts. Okay. Now, why flexi cap? Because flexi cap is a basic mutual fund which invests across large cap, mid cap and small cap. Now, if I take a small cap only fund, my drawdown will be higher. If I take a mid cap only fund, my fall is higher. If I take a flexi cap, my fall is balanced, and also it gives me better returns than the large cap index. Now, for some people who are more risk averse, you can go with even a Nifty 50 index fund, right? 20% basically I'm keeping as safeguarded. If you feel other variations you want to do, you can do 10% flexi cap, you can do 10% gold also, up to you, right? This is just a hedge to the portfolio. So if I say what is the purpose of this mutual fund, this is a hedge against fall. Okay, this is a hedge against my fall. I don't want this to fall, and I want this to be a hedge against my fall. Super. Now coming to stocks, how would I play stocks? Now I want to grow my capital. My capital is only 5 lakh rupees. Okay, I have my monthly income that is coming, which I can do as SIP and all of that, but I want to grow my capital. Now, if I want to grow my capital, I need to be smart about it. Okay, I can't go all in and do F&O and lose money. I would not do that, but I still want to beat the index over a long period of time. So I would split my stock investing into 3 different angles. Okay, the first one, I would like to play turnaround stocks. Okay, and again, what is the purpose? I'll put purpose everywhere. Higher alpha with disproportionate returns. Okay, I want higher alpha with crazy returns, and I have to wait for this because this is a turnaround story, turnaround stocks that are changing the game. Okay, and my expectation of this, I'm not putting any return expectation. Let the market decide my expectation. That is number one. Okay, that would be my stock specific answer to that one. Next, I will play slightly risky. I would play mid cap momentum. Okay, mid cap momentum would be my second game. Here I would look at companies between the market cap of 1 lakh crore and 20,000 crores. So 20,000 crores to 1 lakh would be my playing arena today. Okay, and here turnaround can be anything. It can be large cap, mid cap, small cap, but mid cap momentum is only 20,000 to 1 lakh. That means my universe has become very small, and I'll show you a little bit with other screeners and all how that would look like. But this is basically how I do this. The purpose of this is mid cap momentum. I want big companies, okay, that become bigger. That's it. Big companies that become bigger. I just want mid-cap companies. Mid-cap companies may advantage what is there. It will not fall down as fast as small cap, but the growth potential is also there, right? Now the third one, because turnaround is risky, mid-cap is also risky, I would take the third option as large cap compounders. Okay, large cap compounders. This is how I would balance my portfolio beautifully. And here I would add a caveat that the large cap compounders must be in this zone of stage 2. Okay, stage 2 means they are in momentum. Okay, they are very big companies moving in momentum, and these are consistent compounders. Here you can get examples of SBI, Reliance, Airtel, NBFCs, right? And obviously we will come to how I would pick these stocks also. But these are the three plays that I would do. And here what I would do is, how would I allocate the capital? If I had to allocate capital over here, I would do a simple weightage over here of 1 lakh to this, right? 1 lakh to this and 2 lakhs to this. This is how I would play it right now. This way, what advantage it gives me here is that in any market, whether it's a good market or bad market, I can actually hold my stocks. Because if the alpha comes, if the market goes into a bull run, turnaround will make money. Mid cap is in momentum, so I'll make money. Large cap are compounders plus momentum, I will make money. But if the market falls for some reason, something goes wrong, Trump announces tariff number 3 of 100% on India, then my flexi cap will save me, my large cap will save me, mid and turnaround will actually fall. But if I had to do it from a percentage standpoint, as you can see over here, this would be 20%, right? And the other two would be in the similar space as well. This would be 20 and this would be more than 20, obviously, at 40%. So right now 40 plus 20% is my balancers or stabilizers in the portfolio, and the remaining 40% I'm playing little aggressive. So 2, 3, 4, 5 at 40, 50, 60, 70, 80, 90, 100. So 60% I'm playing safe, right? Actually it's not safe also, but 60% is good, 40% is risky. So this way my portfolio is balanced well to capture whatever alpha I want, right? And this is how I would play it if I had to play it exactly today. Now coming to the stocks, how do I find these stocks? How do we go into this deeply, and how do we look at companies one by one? Now, first thing, as I told you, I would find companies that are in that market cap range of, let's say, 20,000 crores to 1 lakh crores. Let's start finding mid cap momentum. Okay, now for mid cap momentum, as you know, I have a simple screen. Okay, I have a Shashank Funda screen that I call it, which gives me this kind of a screen. Market capitalization, let us do 20,000, and again let's put market capitalization less than 1 lakh, and return on equity, I want non-negotiable 15%. I always like this. Return on capital employed is also 15%. This we can remove. Debt to equity less than 1.5. Operating profit margin, we want at least greater than 12. EPS of this year, earnings per share of this year should be greater than earnings per share of last year, and sales growth should be at least 10% in the last 5 years. And I only get 45 companies over here. Now my job is from 1 lakh to 20,000. My job is to analyze which companies can actually do better. That's all my job is, to analyze which companies can actually do better. Now, how do I choose the companies? This is mid-cap momentum. Mid-cap momentum means I want companies that are going up, not that are going down, that are going up. Now, whenever I look at companies that should go up, ideally, what is the ground rule of the companies that should go up? That they should be in momentum, and they're usually in momentum because of a favorable sector. Now, I have to sit and think back. The next 3 to 4 years, Shashank, what do you think will do well? Financialization will do well, banks will do well, public sector banks will do well, NBFCs will do well, power sector will do well, That is how I'm looking at things. So if I start going, and some pharma companies will do well. If I had to go and look at this, I like and hospitals will always do well. Now, if I had to look at the financialization theme, let us look at some companies. NHDL is there. A lot of companies are there actually. So auto ancillary is also a theme. I'll open Force Motors. There is Anand Rathi, right? Let me just open a few companies. By the way, none of the stocks that I'm showing you right now are buy and sell recommendations, and I don't hold them as well. So don't worry about it according to SEBI rules. Now, if I had to open Anand Rathi just as an example, I've not bought it, but just as an example, right? Last 1 year, it has gone from, let's say 445, now it is at 630. Right now, it is not in momentum, but if I had to look at it from a long-term standpoint, can I say that it is a good company? Answer is yes, because it's a fundamental grower, right? And I want that fundamental growing force to be there. Same with Force Motors. Is it a fundamental grower? Answer is yes, right? Let's say a hospital company, something like Kim's, right, which is a medical company. If I go to the last 1 year, it is flat. As you can see, this is not in momentum. So if it is not in momentum, it is not going to give me a very good, let's say, a growth trajectory that comes into the picture, right? So I want something that is in that momentum force which is growing. For example, there is another company at 50,000 crores, MCX, India's largest commodity exchange. This, as you can see, is in super momentum. So I would still play this. It is not like the momentum is over. MCX is going to be very relevant even 5 years later, right? Yes, there will be ups, there will be downs, that is with any company, but it will continue to go up is what I believe in, and obviously I will do my research behind it and all of that, right? So that is how I would find the mid cap momentum. Large cap momentum, I would do the same example, and instead of doing 20,000, I would just delete that and just make it greater than 1 lakh, and my universe will be very less, actually only 26 companies. So that is very good for me. In fact, if I get only 26 companies and such great companies, here I have something like a Persistent, right? Something like a Persistent in a year, it's going up now. Last 1 year was bad for IT and the P ratios will be very low. It's actually still 60, so I would not go for Persistent. Let's go for the brother of Persistent, that we call them twins, Coforge. Last 1 year, 1% down. This is at a much favorable risk reward ratio, so I would go for something like a Coforge over here, right? Then if I had to look at themes that will do well, financialization themes. Okay, let's look at BSE, which is a large cap company. Last 1 year, 48% up, 60p, very big, but quite good. And here, if you want to even add a P ratio filter also, I would like to see, there's even AMC businesses will do well. So we can check out, if you go with leaders, your chances of winning is higher, right? HDFC AMC doing really well. As you can see, yearly profit growth, everything is growing only. So this is another company I would play. Now, these are large cap companies. They won't fall too much when the market falls. Not just this, there are so many others, like you have TVS Motors, you have HAR Motors. This is again superb. They're growing really well in Nepal. They're growing really well across the world. 53% gain on this. Doing phenomenally well on both revenue and profitability, right? And they're in the upcycle of auto. So that is how I would play the second part, which is large cap I showed you, mid cap I showed you. The third one, which is turnaround, this is tough, okay? Because this you have to sit and read a lot. I like reading a lot of Value Picker. I don't know if you guys have seen Value Picker. So Value Picker is a forum where I read a lot of it, right? And here I usually just go and search turnaround, and I start seeing different turnaround stories. Like for example, Sammi Hotels is a turnaround story, Tilak Nagar is a turnaround story. Some will be recent, some will be old, but this is the only way you will sit and find turnaround stories, by reading. But you don't need many turnaround stories, you need 3 or 4, right? I usually go to Value Picker and I read a lot, like something about nuclear energy I was reading, but I didn't find anything interesting, right? So I keep reading a lot of companies over here. I look at other people's company, but here this is the only company that will give you the best returns, right? The only company that can give you very high alpha is by reading these companies as well. And I read a lot of these companies as much as I can. I don't invest in all of them, but I try to understand which company is actually a good compounder, which company is not a compounder, which company is a turnaround. I look at other people's YouTube videos, but at the end of the day, I make my own research before investing, because then it won't make sense. So if I had to play my 5 lakhs, this is exactly how I would play, where I have 1 lakh in flexi cap, so I'm not worried. I have 2 lakh in these amazing large cap companies. I would play the finance and auto theme. I would not go 100 places, just 2 themes themes I would play it as much as possible. I would play mid-cap momentum, companies that are big, that will become bigger, undervalued today. We put a P ratio filter, and turnaround I would read. This is the only time I'm putting effort in my life, but all of this would give me very, very good returns. Now, how many stocks to own? As I said, you have 2 lakhs, you can take how many ever stocks you want, does not matter, right? Ideally, this don't over diversify, don't have 30-40 stocks in your portfolio. But if I have 5 lakhs, at least 20 stock portfolio I would create in this, but it should be in the same ratio, right? So that when the alpha starts getting created, you are in a very good position over here as well. Or else what happens, you will lose focus and go all over the place. And that is why I would suggest just stick to your core work. Don't go all over the place in this, right? Awesome. So that is how I would play my 5 lakh portfolio. And for all the people who are still watching this, we have recently got a very big discount on small case for New Year's and Christmas. And we also have a new launch coming very soon. So if you are interested in looking at them, please do give it a read. We have 2 small cases, Fluid Q, which is the quant small case we have, and Fluid C, which is a consistent compounder small case. This is a long-term basket. This is a short-term every month kind of a churn basket. There's a big discount going on. So if you want to have a look at it, you can, but that is it from my end. By the way, if you have any doubts, any questions, put it in the comment section below and I'm happy to reply to whatever comments that you might have. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye-bye.